All right. Hey there. Good morning, everybody. Chris Franks with Texas West Capital coming at y'all live here just after 11 a.m. Central Standard Time. As always, on Friday, the 4th of October, 2024. Yes, I had to check what the date was. Hopefully, you guys are doing all right. Before we get going here, do me a favor. Please, please, please hit the like, hit the subscribe button, leave a comment. Bookmark it on Twitter, X, if you're following there. All those great things, because it takes a second or two out of your time, but it really does help. My content kind of get out there and hopefully help other people. Understand what's going on in the markets a bit better. If you guys have been following me, I call it pretty well. That's 30 years of experience, let me tell you. But my goal is always is if you're here, I take that seriously. I expect that you're really here to learn something. And so, regardless of whether you ever join anything we do, at TWC, at Texas West Capital, regardless of if you ever do anything with us or not, you're here now. And so, I want to make sure that it's worth your time. So hopefully y'all get that. I think you do, because a lot of you keep coming back, and that's great, right? Let me see here. Who's here already? We got Data. What's going on, Data? Josh is here. Sats McGee is here, my buddy from Austin. Matt's Trades is here. Soren is here. What's going on, bud? Coming in from Copenhagen, man. And that's the Texas way you say it. So if there's a more proper way to say it, you guys will have to let me know. But as Texans, that's how we're going to say it. All right. Speaking of Texas, before we get going here, oh my gosh, blue alert at like 4:53 a.m. this morning. I didn't say anything about it, but man, I came on to Twitter, on the X, man, and a whole bunch of Texans out there like, seriously? Because you guys don't, those of you who haven't been to Texas, you don't understand. Texas is a pretty damn big state. And a lot of, and this goes out statewide. What it is it's an alert if there's been an assault or whatever on an injury to a Texas DPS officer. And so, you've got people that are 8 hours away, halfway on the other side of the state, getting woken up at 4:53 in the morning. Like, what the hell? So Seth Altman is the person, and everybody hates Seth Altman. Everybody in Texas hates Seth Altman today. So, man, I was not happy to be woken up by that. I'll be honest, guys. Yeah, see? Hello, hey there, Ellison. She said right there, see? Seth Altman, most hated man in Texas right now. You are not even kidding. Oh, I was like, you can't be serious about that. Anyway, nonetheless, so here we are, hours later. We're awake, right? We're awake here, right? If you weren't, you probably got woken up with the great employment data that we had that came out today. So we had unemployment, which actually fell from 4.2 to 4.1%. And that's after it fell from 4.3 to 4.2, remember? Because we were at 4%, and then it popped up to 4.3%. And everybody's like, oh my God, that's incoming recession. The Psalm rule, it tripped that and whatever. And at the time, I said the same thing, which ended up a few days later, Psalm herself actually said, which is that we're in a whole different kind of, economic and employment situation now after the pandemic than we ever were prior to the pandemic. So like, she even came out a few days after that and said, hey, listen, we're not in a recession right now. She's like, I know my Psalm rule trip, but look at the different things that are going on with the way in which our employment is at this moment here. And so what happened? Everybody freaked out, like, oh my God, recession's coming. And what has it done? It went from 4.3 to 4.2. Now it went from 4.2 to 4.1. By the way, remember, historically, 5% or lower has been considered full employment here in the U.S. And they do that because there's always expected to be some employment. But for all intents and purposes, 5% or lower is historically has been considered full employment. So my God, even if we went up from 4.1 here, eventually up to 4.8 or something, we'd still be considered full employment. And that's a big deal, right? Now, you can argue about, how we're employed and the quality of employment and all these things. And there's a lot of arguments that go on, right? Because I bring up these points like, oh, well, speaking of which, we can talk about the non-farm payrolls, right? They were expected to be 140,000. They came in at 254,000. That is huge, right? And that's up from 142,000 last month. Okay. And they'll go, oh, but it's going to be revised down. It's going to be revised down. Guys, listen, they revised up August and July's numbers. Let me see if I can find them again here. I don't want to tell you a fib. I posted it here on Twitter, X. I'm just going to keep calling it Twitter. I can't get behind the X thing, guys. I don't know about y'all, but I can't do it. Been using Twitter for too long. Oh my gosh, what did I do with it? Sorry, give me just 1 second to see if I can find it here on my feed here. Oh, there it is. So there was an upward revision of an additional. They added 17,000 jobs in August to the August payrolls. So that went up to 159, right? It was 142. It's now, so they revised it upward to 159. And then they also revised upward July's payrolls by 55,000. So that went up to 144,000. Okay. Now, some people get bent out of shape because government, is always revising numbers. That's the way it works, though. The way in which they collect and they figure out the data and whatever, it leads to revisions, and it has multiple revision dates. And you can go to the BLS site and read up on it. Okay. So you're going to get revisions. It's not like they're out there saying, oh my God, let's make this number look this way so people believe this thing or that, which is, common Twitter X conspiracy theory kind of stuff. It's just the way it is, guys, because of the inexact way in which they, do their numbers, which is why ADP's payroll numbers are always different, because ADP does it differently, right? But listen, guys, it's gonna revise every month. It's gonna revise. It's just the way it is. Okay. Don't get so caught up in, oh my God, the government's screwing us. The government's lying. How do we know to trust these numbers and whatever? You don't have to. You don't have to go through all that. Just trade based on it. You'll be fine. I've been doing this 30 years. I'm telling you right now, trade based on it. Why? Especially today. Equities, 65 to 70% or so of equities trading is done by algorithms, which are not touched by human. You have zero intervention by humans. Okay. And that was as of 2023. So that was as of a year ago, a little bit over a year ago, that number was out. And those algorithms trade based on the data, right? They trade based on, I say news events, right? It's the data that's released in the news events, right? That's what some of them do, right? A lot of them do, actually. In addition to, different things they look at, as far as, pullbacks and rallies and, maybe moving averages, depending on the algorithm. But a lot of them trade based on that. Okay. So this idea that, oh my God, I don't believe the government, because really who would? The government's a bunch of liars anyway, right? Let's be honest about it. But, oh my God, I can't believe the number. So how can I trade? Well, you can trade. Just trade based on it. The numbers come out better than expected. You're going to expect, generally speaking, price to head upward, right? Now, the one thing I would say is don't trade the news event when it happens. A lot of people want to do that. They think they're going to make these big, huge gains. And maybe they're lucky that occasionally they do. But most of the time, you get a lot of volatility, a lot of not just volatility, but a lot of chop, right? You get a swift move up, swift move back down, swift move back up. And so even if you've got the right direction in play, your stop loss is probably going to get hit along the way, and you end up losing money anyway. So, I usually say, give it a few hours at least to kind of get done and get a trend going on what's going up with it there. Okay. Let me see here. So that's kind of what we're, that was kind of the big news today. Other big news this week, the strike, the port strike, that's been apparently taken care of. I guess they're going to get a 63% pay raise over the next 6 or 7 years. They already make something like the average one there makes something like $120,000 a year. I can't believe, I don't know. As an American, there's a couple of things that pissed me off this week. One is that, okay? Like, my God, you're crying. And what they're really crying about is the automation that's coming in. That's what they're crying about. But guys, I tell you what, this is life. This is life, okay? You need to continually upskill. You need to add additional skills. Don't expect that your job is going to be just perfectly fine and never get touched, right? Especially if you're in a manufacturing type job. That manufacturing is getting so automated these days. That's a good thing. Technology is deflationary. Okay, it brings down costs. Now, you're going to lose jobs in those places getting automated, but it will also create other jobs, right? It isn't just like, oh, the jobs disappeared and that's it. Other jobs are created in having to do with the automation in other areas. But you can sit there and whine and complain all day, oh, but I shouldn't have to. Yeah, you should. That's life. Life does not sit still. Life is continually evolving. You got to be doing that, right? So that's the first thing that pissed me off. The other thing that pisses me off, what the hell is this FEMA response with the hurricane? I mean, are you kidding me? I'm at a loss for words. $750 a person. That's way up there, right up there with what happened in Maui, right? Are you kidding me? And then FEMA's not even really doing much over there. So people are coming in privately, their own money, flying in their own, helicopters and supplies and searching for people and helping people out, whatever. And FEMA's like, no, they can't do that. So local police are like, hey, listen, if you do that, we're going to arrest you. We're going to throw you in jail. By the way, if you want to help out, now you have to apply for a permit to help out. Are you kidding me? Are you kidding me? Absolutely stupid. So, I hate that I started this off with this, guys, but honestly, it pisses me off. It's like, this is the money y'all are paying in taxes. This is what's going to, illegal immigration coming over, and listen, guys, there is a difference between illegal and legal immigration. Okay. I'm not against immigrants. Not at all. My mom is an immigrant. She and her dad and her mom, my uncle and my aunt and whatever, they moved from Germany to here back in the day. Okay. Immigration is fine. Immigration is great. Illegal immigration, where people aren't being vetted, where people are just being allowed to come in. And then we're giving them all this money, and we're apparently maybe setting them up with social security numbers and whatnot. I don't know how true that is, but if that is, holy crap, what the hell? They shouldn't be allowed to vote and do all these things that we, as American citizens do, right? So anyway, when we look at all that, it pisses me off that the people here need help from the government that we pay all this money to and we bow down to, and they force us to be subservient under. And government's like, yeah, well, FEMA doesn't have any more money. We're too busy spending it on, on all this illegal immigration stuff. Absolutely stupid. Okay. So, it sucks. It sucks as a human being who loves other human beings just for the sake of them being human beings, right? It sucks to see people hurting like that. And they can't even, trust in their government who they live under and they pay all this money to support them when something like, Helene comes through and takes out entire towns. Absolutely insane. All right. So I'm done there. Okay. Had to get that out. It sucks. It just sucks, but anyway, so let's talk about it. So now we got employment come in. Employment came in great, right? So is Q4 low in? Everybody's like, oh, October, right? And then October 1st, it went down. Everybody's like, oh my God, it's the end. There's no October now. Guys, come on. There's 30 days in the month, right? 31 days in the month, right? We're only on day 4 right now. And I'm about to show you a chart that looks like, oh, okay, well, things are looking pretty decent, actually. Historically, Q4, strongest quarter with crypto, Bitcoin, stocks, everything, right? Because you have the lagging effect from the summer doldrums, right? Where everybody kind of goes on vacation for a few months, basically. They start coming back into the office in September. They start getting a little serious about the markets into September. You start getting into October, right? Notoriously, September is a red month in stocks and in crypto, in Bitcoin. Okay. But I talked to you guys at the end of August and the beginning of September. I said, but the charts are saying that we're looking like we're going to have a pretty good September. And for Bitcoin, we had the second best September on date. Best September is 2012. It's only like a third of the September. So basically 5 out of the 14 years that Bitcoin's been in existence has September been green. And this was by far, other than 2012, was by far the best green September, right? So, it's not surprising we have a little pullback at the beginning of October. That makes sense, right? David says, it's too easy. Buy the dip every 5th of the month for the past 6 months or more. Pretty much, right? Right? It's been interesting. So yeah, so we kind of get into October, right? We go down a little bit here at the beginning of the month, and then what happens? Well, let's talk about that. Let me pull up something here. Where is my charts? Give me a minute. I'll find them. There we go. Let me kind of get a little bit better look on here. There we go. All right. So this is Bitcoin, folks. And so, we had the pullback. We had initial target of this month's new daily pivot here on the monthly, okay? And that's where we went. Let me zoom in a little bit here so you guys can really kind of see this. Let me take off all this other stuff. Look at this. 2 big candles down into here with volume, right? And then you've got still pretty good volume here, but almost no candle spread. A little bit less volume, still very small doji body there. And here we're going up today, right? When you see something like this, especially around support, you should be looking for price to likely head in the other direction. That's what we're kind of doing here today. You can see that on the RSI here, as we kind of got down in here. We got us some lower lows with the RSI, the oscillator here. We got higher lows here with price, which gives us hidden bullish divergence. Hidden bullish divergence means continuation of the uptrend, right? Here's the uptrend, continuation. We can see that stochastic RSI bottomed out and oversold, bounced up, is crossing bullishly and heading up toward breaking out of oversold here, right? I mean, this looks good and clean. If you're looking here, this looks good and clean here as far as the chart goes. Now, I've been looking for a while now. Remember, we were talking about maybe we had a 1 and a 2 and then maybe a 1 and a 2 here. This corrective type price action here suggests to me that we're probably doing a leading diagonal instead. And so that gets us like an ABC for 1, 2, WXY for 3, 4, and then we'll get an ABC up for 5. Okay. So I think that's what we're looking at right now. I think we're looking at a 5th wave going to rally up here in progress. Give us an expected target probably right around the R1 pivot here on the daily, around 69,100 or so. Now remember, we're in bearish market structure off the all-time high. This is our last lower high. Remember, it's high, low, lower high, lower low, lower high, lower low, lower high, lower low. Now, because we have a lower low here and a lower high here, this is all interior higher highs here. But these do not break the big structure, okay? We have to get above this swing high on this Bitcoin all-time index chart. That's $70,040.75. So depending on what your exchange you're on, it's Monday, July 29th, 2024, here Central Standard Time. That's the swing high. So it's somewhere between 70 and 71,000, depending on what exchange you're on, that we have to get above. We get above that, that breaks the bearish market structure here, okay? But this is setting up as potential bullish market structure off that swing low. So again, the idea is we get a 1, 2, we get a 3, 4, we get an ABC up here for 5. Now, I've been talking for a long time, guys. When we talk about Wyckoff, which is basically the study of ranges, right? Usually what you get is so you have this, this main kind of resistance up here, right? And usually what you're going to get is a rally up into that area, a pullback, and then you get your major kind of breakout, right? So the idea that this is a leading diagonal makes a lot of sense. It gets us up near that all-time high. We pull back for a wave 2, and wave 3 is the participation wave. That's where everybody kind of joins in and goes, oh crap, I need to be in here. Why am I not in this, right? And so that's where you get, all the volume, you get the large candle spread, you break out through major resistance. So when I look at this could still be an ABC here, but I don't think it is. And if we get one more push out higher, that adds a lot of support to the idea that we've got this leading diagonal going here. Okay. So that's kind of what I'm looking at here as we do this, because again, there is no real, it's not like this. There's no real impulsive movement that we usually look for, you know, when we're looking for counting our motive wave, our 5 waves. And so it looks like a lot of overlapping, you know, not big movement up kind of movement. It looks corrective. But if it's a leading diagonal, we can, you know, you can do 5 waves up, 3 waves back, interior market, interior structure, or you can do 3 waves up, 3 waves back, interior structure for a leading diagonal. So again, this case, it would be 3 waves up, 3 waves up, get 3 waves up to give us that. So I'm looking for this. We're getting a great rally so far this morning here off this, again, that's September 16th. So about, what is that? About almost 3 weeks of hidden bullish divergence there. Starting to get that move. So we want to see some follow through up. And I start feeling pretty good about that. And, you know, that would tell me that most likely this low would be the Q4 low. Because the idea is that we would head up here and then we'd pull back to the daily pivot area. Get our 1, we get our 2, and then our 3. And if we do this, okay, if we get to the R1 pivot there and then pull back to the pivot for 2, and then we go 3, this is how it looks. That gives us a minimum expected wave 3 target at 104,714. Wave 4 at 85,174, and then wave 5 at 118,972. But let me talk to you for a minute here. 100,000 is a strong level, right? It's a very, what do you want to call it? Psychological level, okay? It's a zeros number, tens number. It's, you know, it's the thing that we look for, which as human beings, we subconsciously deem as significant, okay? What does that mean? That means either 1, you hit 100,000, the 100,000 area, and then you pull back and then you break through, or you break out through that, you come back, retest this support, and you go on. If this is going to be the end, the final, and if we get a blow off top like we always have, the idea would be that we wouldn't just go to our minimum expected wave 3 target. That we would likely get closer up here toward the 2618, which is around 146,000. Because that 38.2 brings you back to 104,700 or so, which would be the wave 4. So you break out impulsively through the 100,000, you pull back to the 100,000 area, and then you rally up for your wave 5, which then would have a minimum expected target up there around 180,000. Now, that, of course, doesn't say that wave 3 goes up larger than that. It doesn't say that wave 5 goes up larger than that. But just looking at this idea that with 100,000 there, we would blast through it, overextend on that wave 3, pull back for the wave 4, keep that 100,000 as a base, and then break up higher. I mean, it's quite possible we could be looking around 180,000 or higher going up there, okay? So this is what I'm kind of watching as this plays out. But again, our initial, if we get the wave 1 to the R1 pivot, wave 2 back to the daily pivot, wave 3 initially should be 104,714 on this chart. Should be where it's targeting. So that's what I'm going to look at first. And then we'll see, does it go higher? You know, does it go to the 200% at 119,000? Does it go up near the 2618 at 146? Hell, does it go up to the 3618, which is 204,000? Because if you're doing a wave 3, your initial target is 1.618. But after that, you look at the 200, the 2618, the 3618, and the 4618 as potential overextension targets. In Elliott wave, you have 2 things. You have rules and you have guidelines. The 1.618 extension for wave 3 as an initial wave 3 target is a guideline. It's not a rule. It's a guideline because more times than not, that's about where wave 3 gets. But it can go higher. And those levels we watch if it does. So we'll see how it plays out. But these are the possibilities that I'm setting up and watching as we continue to go here. The only thing I think you can really say about bearishness about this range from the all-time high is that we haven't broken out above that last lower high. Other than that, everything else is bullish as well, right? I've had people ask, does it make sense to have a capitulation down below this swing low? Not really. Why doesn't it make sense? Because we already had the capitulation. That was this here. This volume was the largest volume since right here, as we kind of drop down and rally back up here in March 5th of this year. And other than that, the only volume that even comes near these two here is this volume over here, right prior to the swing low. Back here in November of November 9th of 2022. That's how significant that volume is, guys. That's how significant that volume is. So we've had capitulation volume in that candle. We've already had that. So it doesn't make a whole lot of sense to come back and, everything, we have to come back there and dip it down again. No, that doesn't make a whole lot of sense at all. Now, we could, and you know what? If we broke down below that swing low, as I keep telling you guys, we would just look at the 50% retracement at 42,856. Because wave 4, initial target is 38.2, which we just about hit right here. And our generic secondary target is always the 50% retracement of wave 3. So even if we were to do that, I would still have no reason to feel bearish overall in terms of the overall structure, because all we're doing is potentially printing a wave 4. Okay? But again, with the setup the way it is here, the capitulation over here, the volume and price action relationship through the range here, to me, this seems like this was a spring. We had a much lower pullback here, so a higher low on significantly less volume. You can see over here the volume was, you can read it up here, was 85.226. On the pullback there, 27.609. So basically a third of that volume on the pullback. That's when you have a strong spring like that, that's so much bigger than the volume that comes down in the selling climax, then you're going to look for a test of that spring. That's this pullback here. And you're looking for a higher low on lesser volume. And as you can see, again, just 1/3 of the volume, significantly less volume. That's a successful test. So if I'm reading this with Wyckoff, that's a spring, show of strength. There's your test, show of strength, last point of support. We'll pop up here for a show of strength, last point of support. And then this right here, as we break out through this top, will be the jump across the creek. In terms of Elliott wave, again, W, X, Y correction. 38.2 pullback. I mean, it's screaming wave 4. These are the things we teach day in and day out, at the Trading Academy, guys. And we explain to you how it works and why it works and how it all works together so that you understand how and why markets move the way they do. What I talk to you guys about here is just barely kind of touching the surface of what we do there. But I guarantee it will make you a better trader every single day if you put your heart and soul and mind into doing it and doing the things you have to do to get good at it, just like any other thing that you learn, right? So, is the low in? I think we're building a very strong case for Q4 low to already be in now. All right. So let's zoom in a little bit here. Let's check in 1 hour. We're coming down here. Yeah, look at this nice rally here. Look at this nice bullish engulfing candle off this. Look at, we've got a not quite a hammer candle here, but right there off that daily pivot support. Absolutely perfect. We'd love to see that. Then a bullish engulfing candle, and here we go rallying up through it. This is the descending wedge that I talked to our members about that we were looking at in the breakout through, which we got here in a retest, and boom, here we went back up, pulled back. Here we're going again, trying to take out this supply that's right here. It's wick. Bouncing just below neutral, crossing bullishly back on the bullish side of neutral as well. Stochastic RSI bouncing just prior to neutral, crossing back bullishly, remains bullish above neutral. on there as well. 15-minute, look at how this is the movement we'd like to see. Nice clean movement up, breaking out higher. Looks great. 4 hour, we've been overbought here for a while, but again, you can stay overbought. Here we got 4 hour getting overbought where? Right here, and remaining overbought all the way up through the swing high up there. So, from basically 62.150 rallied all the way up to about 64.150. So, you can stay overbought for a while. We did again over here as well. Up here and came back. So this could stay overbought for a while as we continue to go up. I like the volume profile on this candle that pulled back to the daily pivot as support and closed back up. It's great volume coming off that. So I'm feeling pretty good about Bitcoin at the moment here. Let me see here. Brad, what's going on, man? He says, looks to me that if Bitcoin gets back above and holds Wednesday's high, then we return to September highs, probably back to the all-time high after that. I think you're about right on that, man. Yeah. It's once we get through this supply here, I mean, you've got your, your fair value gap here, that you want to get through, but then you got one up here. But yeah, if we're breaking out and closing above that, odds are we're on our way heading up. What I really like, again, for me, is the bigger picture here. It's the fact that we pulled back into that daily pivot and we held it as support. Couple of dojis down here, lower wicks showing up in here. Volume just dropping off a little bit, but a significantly smaller candle spreads coming in. So more effort, less result at support, and boom, here we are trying to follow up through. So I like that. I like seeing that. For me, if I'm looking for things that say, hey, that low may be in, these are the kind of things I look for. Nothing's ever guaranteed, of course, guys, which is why proper risk management is so important. It's the most important thing you're going to do day in and day out as a trader, all right? But this is what we like to see. This is the kind of movement that we like to see. Okay. Let me see here. Bitcoin dominance continues to rally up, right? So I update this weekly with our, oh my gosh, with our members. Jeez, I can't think what I'm saying here. With our group coaching students. We update this every week on Friday. This is the latest update. Again, it's still following along. Wave 5 at 3 target up at about 60.20%. So overall, that's what we're looking for. Love to see it. I mean, it looks good. It suggests strength in Bitcoin still is there. We can look at our indexes here. I update these every day for our group coaching and our Traders Club members. And so we have the NASDAQ, we have the S&P, we have the Dow Jones over here. 3-wave pullback into the pivot as support. 3-wave pullback into the previous resistance as support. And then 1, and then triangle is 2, and then 3 waves. So A, B is a triangle, C, pullback, just sweeping the low there so far on the Dow Jones. And you can see that the stochastic RSI bouncing just prior to oversold, trying to cross bullishly here on the NASDAQ. On the S&P, we reset into oversold really well, threatening to cross bullishly here and break out. And of course, we're starting to curl up here on the Dow Jones as we do this. So all of them, I'm looking initial targets up there around the R1 pivot. So for Dow Jones, we're looking around 43,300. SPY, we're looking around 586. NASDAQ, we're looking about 20,764 or so. These are local targets. Obviously, I expect things to continue higher as we go through these. So, stocks, NVIDIA yesterday, NVIDIA rallying up. NVIDIA continues to look good. I believe we're headed to new all-time highs with NVIDIA. Something I've talked about here lots of times when everybody's talking about, oh, it's in, the top's in, the end. I said, no, it's probably just likely a pullback before we do, right? Gold, it looks like we may have a triangle forming here. And if we do, based on the height here, that'll, breaking up out of this will give us a target up here around that R1 pivot at 2741 $1.90. We've got a bit of hidden bullish divergence here printing. I don't have it marked here, but I'll go ahead and mark it, I guess. Right here. Let's see here. Current interval, there we go. So hidden bullish divergence printing there, and stochastic RSI resetting into oversold. If we were to break down, maybe it'd be an ABC, but I'd look for it to find support here at the daily pivot right around 26, 23.20. But for right now, it looks like it may be printing a triangle. Want to see a breakout to get us that upper target for 3, and then we'll have a decent sized pullback for 4. Let me see here. Can we look at Goog, please? Yeah, we can look at Goog. Let me see. Actually, let me look at coin here real quick before we do that, all right? So coin, I believe we've got a wave 4 pullback, about 50%, flat correction. Broke out of the descending wedge resistance for wave C. Came back, retested as support. And let me kind of get this moved over here. Yeah, I'll get back over there. So again, pulled back about 50% for the wave 4. As I already explained earlier, it's a secondary test, or the secondary target for wave 4. First target's 38.2. And here we are trying to break up off that and head out. We had some, as you can see here, hidden bullish divergence from this wave 4 low to this wave 4 low. Higher lows in price, lower lows with the oscillator. Should be continuation up higher. Stochastic RSI bouncing just prior to oversold, curled up, trying to get that cross, that bullish cross. So this would give us then a wave 5 of 3 target based on the height here, pattern target of 427. All right. Let me see here. Bitcoin up to 62,000 already. Yeah, that's what I'm talking about. You guys have to stay. I cannot tell you guys this enough, okay? You have to stay away from all the fundamental analysis and all the whatnot that goes on social media, guys. Most of that is just people that they just regurgitate these very, very not very deep thought processes of things kind of how they may have been in the past a little bit, but they keep getting repeated as truths. And so they get hooked on that. And then their bias is, oh my God, we're bearish, like it's been for the last 2 years, they've been saying. And they'll keep finding reasons why fundamentally we have to go down as price continues to break out higher. Just stay away from it, guys. Learn to read the charts. You're not going to get the chart correct all the time. But once you really start learning how to understand it, again, the things we teach, right? The things I teach over there at the Trading Academy, right? It's a true understanding of how and why price actually moves. How and why do markets actually move the way they do? And once you do that, you can apply that to any way of looking at the markets, any strategies, any kind of methodologies, indicators you're looking at, all that stuff. It like opens up a whole different window into how markets look. You'll never look at them same again. But anyway, let me get Goog on here. What'd you say there? I didn't like how coin didn't hold the macro higher low structure on the August low. On the August low, this one here. Well, it's just, again, in terms of Elliott wave, it's just ABC down, ABC up, 1, 2, 3, 4, 5 is an ending diagonal. Breakout, retest. If you're popping above this swing high, you should be good to go. You should be looking up here 427. Right? So, I mean, at the end of the day, you've got a high, you got a low, you got a lower high, lower low, lower high, lower low, potentially lower high. But this only becomes a lower high if we break down and get a new lower low, because until then, price can break out higher, right? So this wouldn't be then the lower high. You could have a lower high here or something. But of course, if it breaks out above that last lower high there, then you break the bearish market structure off that swing high. So yeah, if you're looking structure-wise, what you want to see is a breakout above this swing high here on coin at 211.92. And that will break that again, that series of lower highs and lower lows. Okay. Let me see here. So jump over to Goog. I know somebody's asking about that. Google, Alphabet. What do we got going on here? Yeah, but MicroStrategy, he says MicroStrategy did hold it. MicroStrategy printed a wave 4 triangle instead of a flat correction. See, this is the thing when you understand things like Elliott wave, then you understand that there's a rhyme and reason to the way in which price action actually moves. And, you know, it gives you an understanding of what's going on there. Because like you're looking at, you say, well, MicroStrategy held it, but coin didn't. So I'm really concerned about coin, right? I mean, that makes sense. That would be the way you would normally look at it. But if you also know Elliott wave on top of it, you go, okay, well, it's just two different corrective patterns. MicroStrategy printed a triangle, coin printed a flat correction. And all of a sudden, there's not really that much worry at all in it anymore, right? It's kind of like the way people don't understand when I say, you know, I'm like, oh, well, if it does break down, we're looking potentially around 42,856, and I'm not concerned at all. And a lot of people listen and go, why? What do you mean? How could you not be concerned? Because we're talking about the macro picture here, and it's just potentially still wave 4 in progress, right? But if we look at structure and everything else, all this, it looks kind of scary, right? Looks kind of different there. So yeah. Elliott wave is a huge, I'm telling you, a lot of people will sit there that don't do it, or they don't do it correctly. They'll say, oh, you just make it say whatever you want to make it say. That isn't, yes, you can try to do that, but that isn't how you do it, right? You have to understand how and why Elliott wave works. You know, what is it doing? What is it basing itself on? You know, why does it work? And then you got to get in there. And sometimes the tough thing, especially if you're new, is to get your biases out of your head of what you think things have to be, because you'll sometimes try and make them fit. You'll try and make the count fit, right? But like I told you here, you know, we were looking at potentially leading diagonal, a 1-2, and then maybe a 1-2 here, but then this is all looking corrective here. And this already is looking potentially corrective. We were just kind of maybe trying to give it a little bit of, maybe it's a leading diagonal there. So, you know, instead of saying, well, that's a 1-2, 1-2, I'm like, well, if this is corrective and this is corrective, we've only got 3 waves up. So as I told you all earlier, it could just be a correction and we could head down lower. But you know, based on the other things through, you know, Wyckoff and structure and other things I'm looking at, I do believe this is the low here, which means this, I don't believe this would be a 1-2, 1-2. I think it would be a 1-2, 3, 4, and a 5 as a leading diagonal. We'll get a throw over, move back down, and then we'll go up, right? And so that's kind of what, you know, when I'm looking at this, these are kind of things I'm trying to explain, you know, with it. Because again, you're going to hear people talk a bunch of trash about things that they don't understand, whether it's Wyckoff or whether it's Elliott wave, or even those who believe fundamental analysis is the way to go. And they think that technical analysis is astrology for traders, right? I've heard that before. But it's just because they don't know. And human beings tend to make fun of that which they don't understand. Yeah. We can all think about it in our lives. I know I've done it before in my past too. Nobody is immune to doing that. It's a terrible, terrible thing for us to do. Okay? But it is. It is what happens. So yeah. So when we look at this, let's jump back over to Google, right? Let me see here. Let me zoom out a little bit. We do have potential bearish divergence here, okay? But I say potential because we only pulled back a little bit. Look at what we did here, guys. Pay attention. Notice. What did we pull back to? We pulled back to previous resistance. Printed a pin bar candle, a hammer on resistance as support. Usually, that means you should be looking higher. Usually. But the fact that we did that suggests that we're probably going to go higher. And so this could continue, you know, coming up here, and we could end up seeing it potentially close above What is the RSI down here? 86.92. Okay. So if we continue to do this and grind up there and we get above that, well, that invalidates this potential bearish divergence, right? So always be careful when you're talking about bearish or bullish divergence. Make sure you understand your time frame you're on. Make sure you understand what is going on. Do we have a real big pullback? No, we don't. Just a slight pullback here, and we're looking to probably head higher, which can carry this up higher and maybe eventually take that out, right? If I'm looking at this real quick here, I don't know. Let me just count here real quick. 1, 2, 1, 2, 3, 4, 5. Let me throw this in here and see if we've got something here. 2, 3, 4, 5. Okay. I think it's possible we could be building the fifth wave here. Let me see. Wave 3 is up here around the 2618. Remember when I told you that wave 3 overextends? I was talking about Bitcoin. We could be looking at wave 3 hitting the 2618. Here's an example. This wave 3 just shy of the 2618 extension. Right? So then wave 4, and then we got 1, 2, 3, 4, 5. It looks like we're probably printing an ending diagonal here. And so based on that, then 1618, I was almost there. About a $222 area, potentially. Just based off the pullback of wave 4 here. So I think in terms of Goog here, I think it's probably where I'd be looking. 3 waves back on wave 4 here. $170.41, $170.44. So we're 3 cents above here than we were here. ABC, 3 waves, broke out above the second wave. That locks that in as corrective. Now, this could still go 3 waves down, 3 waves up, and then 5 waves down to make a flat. Again, kind of like what I was talking about on which one? On coin, right? 3 waves down, 3 waves up, 5 waves down, right? So we could still do that here, or we could even do, since it's a wave 4, it could be a triangle. ABC down, ABC up, ABC down, ABC up, ABC down. So you get 5 waves, or 5 to finish wave 4 and then break out. But basically, with 3 waves down like this says, okay, well, the correction is complete, or again, might be a flat correction that goes down a bit lower, but overall it's going to be corrective and we're going to get a new all-time high. Also, notice right here, look at that. Almost beautiful. Oh, man, it stopped right here instead of here. I thought we were going to get some higher lows, lower highs here, but you want your RSI to align with your lows or your highs to align with your highs. In this case, this low aligns, but this low over here aligns with this low, not the actual low. But generally speaking, same kind of effect. You have the same kind of potential hidden bullish divergence building there and rallying up and going. Let's see here. Michael says, oh, wait, let me see here. Michael says, monthly looks real good going all the way back to 2021, closing and holding above 59K. Bitcoin looking like one giant cup and handle. Yeah. Bitcoin's not looking bad. It's not looking bad. The problem is, as human beings, guys, especially if you don't really understand markets, if you haven't had consistent success in it for years, if you haven't been through multiple cycles in multiple different markets, you know, it's what happens is when you go sideways like this, even if you were really bullish in here, the longer you're doing this sideways, right, the more time you have to think about it, the more you start questioning yourself. And then if you're on social media and you hear, you know, everybody in the back of your head, blah, 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 you know, top of the cycle's in, everything, blah, blah, blah. it makes it easier and easier to believe that, or to at least become fearful of that. And fear is a paralyzer. You won't be able to get in when you should get in, right? So it gets kind of crazy. It gets kind of crazy in there. But that's why that's why I spend so much time. I don't know if you guys have noticed, but I spend a lot of time explaining the things that I'm talking about and my thoughts, right? Because you're getting a lot of this one-off, like, oh my God, it's the end of the world, Chicken Little running with his head cut off. All these kind of things in social media, no real explanations. Or if there are explanations, I'll be honest with you, they're really usually pretty poor. I want to give you, real actionable information, things that you can look at. I never guarantee that price is going to go up or down, right? Because as a trader, as a market participant, you can't guarantee that. You can say, oh, I guarantee it'll do it. But the reality of it is the only way you could guarantee it is, one, if you're from the future and you saw it happen, and maybe you're not having any other timeline that's going to come in, right? We all know about multiverses and all these timelines, right? No, whatever. Or two, you control it. And I promise you, none of us here are one or two, okay? We aren't. So the best we can do is trade based on our experience and what we know and how we know things usually work. And we kind of come up with a most probable scenario. But none of that's ever guaranteed, which is why I always tell you guys, proper risk management is the absolute number one most important thing you're going to do day in and day out as a trader. There is nothing more important in trading, right? I posted a tweet here. Let me see here. Let's see if I can find it real quick here. Oh my gosh, where is it? I can't find it. Oh, here we go. No, here it is. The quote, and so what I'm saying exactly is, predicting the market is overrated, risk management is underrated. That right there, guys, if you sit there and think about that right there, should change your entire way you approach the market. Okay? That needs to change the way that you approach the market. Because when you first come in, you think it's all about the target. You think it's all about, guaranteeing and getting to those profits, and it's all about the profit. But at the end of the day, trading and being involved in the markets really is ultimately about proper risk management. It's about mitigating the losses that you will inevitably get. No matter how long you've been doing this, I've been doing this 30 years. I still get trades wrong. Nobody gets 100%. Very few people get anywhere near 60 or 70% consistently. Risk management is most important, guys. Not the newest, not the newest technique to trade, the newest system. By the way, guys, there's very, 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 very little that's actually somewhat considered new in trading, okay? You can look at things like ICT's entry models, right? The entry models he teaches. Most of them are nothing more than Wyckoff or Elliott wave structures. Now, I'm not saying he knows that. He's labeled them all these, given these crazy names and whatever. But when you learn them, you go, well, hell, that just looks like Wyckoff accumulation structure with a spring. Or that looks like a distribution structure, or a distribution structure with an upthrust after distribution. Or that looks like an Elliott wave, a flat correction, expanded flat, or a running flat. And those things, Elliott wave and Wyckoff, have been out 100 plus years. Now, I'm not saying the things that he talks about aren't worth understanding and learning. He does teach some things that do help out. And so I've taken those along with some of the other things I've learned myself about price action and volume analysis over the last 30 years. And we teach that in the price action section of our trading academy. So I'm not saying that oh my God, he's ripping it off. I'm not saying he's ripping it off. I'm saying the odds are he probably doesn't even understand that that's what's going on there. But I say that not really to jump on him or anything, but it's to get you to understand as practitioners, as market participants, that most everything that somebody's going to want to teach you out there is probably just a name for something else. And some people may know it, but other people may not even recognize it. They may not realize that it is. And that's okay, because if it's one of these things that is actually legitimate, it works, right? But just don't go out there thinking somebody's going to show you something insanely new that nobody's ever thought about in the markets. The odds are significantly against that. And that's why I teach what I do, and I teach it the way I teach it. Because understanding it and using those tools to understand why markets move the way they do and how you can forecast price action sets you up for life. Troy, what's up, man? Oh, hey, Monkey Man, you were the one that was looking for Goog. You're welcome for looking at it. Yeah. Troy says, in terms of crypto miners, do you think one reason why they've lagged behind Bitcoin year to date is because the mining cost, 78K, is higher than the spot price of Bitcoin, 62K? Sure. Why not? But let me approach it to you a different way here. If we look at gold, for instance, gold miners always lag behind gold price, right? It's just what miners do. We can attribute whatever reasons we want to it, but we don't have to, right? We don't have to go in there and dig in there, go, oh my God, why are they behind? Oh, is it because of this, because of this? We don't have to do that. We just have to understand that generally they're going to lag behind. They're expected to, right? And it's not even all of them. It's just some of them, right? Because what was it? Was it Coors, the big one? They had that big move up? Yeah, again, I talk about this every Monday. We post, 17 or 18 different public miner charts. And we talk about the news and information, everything's going on at the Bitcoin Miner Stocks Report. Yeah. So, I mean, sure, that's probably part of the reason, Troy, but I don't think that you even have to worry about that. I don't think you have to focus on that. Just understand that miners in general lag the product, right? Like, again, we've shown that with gold, for instance. Just understand that that's the way it is. And, again, go in and we read the charts, right? Everybody is so down on miners. They act like mining price, like the miners are never going to go up, right? I mean, that's what I see all over social media every day. And that's just, it's just a lack of understanding of charts and reading them and whatnot. And trying to attach narratives, right? The problem with when most people online that you guys have come across and they're trying to attach a narrative, it's usually that narrative is based on whatever they think price has to do. So their narrative is anchored in their bias. And you got to be really careful with that. I mean, at least if you look at a chart, you can go, well, here are the structure, here's the structure, here's the levels, right? I mean, at least we can do that. And if somebody, because sometimes, a lot of people, they're going to attach their reading of the chart to their bias, right? But if you're attaching this narrative to your bias, right? Well, I mean, how do you visually, you can't put it out there, go, okay, but look here, right? And so that's what people get caught up with. And again, that's why these bears for the last 2 years have continued to get wrecked. Price has gone up. Bitcoin, stocks, everything continued to just flush out upward, right? And every day, every week, every month for 2 years now, they continue to tell you why price has to go down. Well, if it had to, why didn't it? Because it doesn't have to. That's why. Does that make sense? Let me see here. What's going on, Mark? Good to see you checking in, buddy. But yeah, Troy. So yeah, I mean, I think you can attribute that as a reason why, sure. But I don't think we have to do that much, that much mental activity on it. I think we just kind of, understand that miners generally are going to lag behind their product. And from that, we just read the charts, right? What'd you say there? I subscribed to your miner report. It's good stuff. Holding a few of them. Looking forward to some of those moves you've been talking about. Yeah, man. Me too. A lot of good setups potentially getting ready to play out there. And we've seen some of the good ones that have happened since we launched the newsletter, right? We've had a couple of them really, really take off. And 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 we talk about them being behind, but let's face it, some weeks, like just 2 weeks ago, numerous ones were up 10, 15, 20% in a week. Now they ended up pulling back after they rallied up, but they rallied up that much in a week, right? And then pulled back. So, I would definitely say that it behooves all of you to really learn how to read charts. And the more you understand about how and why markets move the way they do, the things that I teach, right? The more you learn about that, the easier it is to read the charts and to read them more correctly. Again, it doesn't mean you're going to be 100% correct. You will never be 100% correct. But you're going to be correct a lot more than you're going to be wrong. And when you're not correct, because of what you learn with risk management and you doing it properly and consistently, it won't matter. Those times you're incorrect aren't going to be worth much of anything. But those times when you're going to be correct are going to be huge. Okay? What else we got here? Let's look at Link real quick here, guys. Look at this. Link. Everybody crying about Link. But when I'm looking here, we've got an accumulation structure here. We got our jump across the creek and our breakout here, right? We got our back up to the edge of the creek. And look at where, again, look at where the support is. Look at that. Right here with this order block. Boom. Runs all the way across here. That's that August 5th swing low. Basically a hammer candle, large lower wick. And boom. And here we are trying to break out above the pivot. If we can close up above that pivot, that should indicate that we're going to be headed up higher. Actually, I bet you we could probably draw this down like this even. Whoops. Yeah, about like that. Yeah, that's nice. But you got basically a wedge here that you threw under. And then we look here and we say, okay, well, there's our volume. Again, look at the volume up here. The volume on that weekly was at 16.462. Pull back here, 7.859. So basically like half the volume, higher low, doji. And then here we are now, a little bit more volume, 8.242 right now on the weekly. And it'll still probably, increase a bit, but we're getting more volume here because we're at this resistance support level right here. So you've got a lot of supply still trying to fight its way in here to keep price down. But we're going to look for that to break out higher. Locally, if we can get that close back up above that, I think we're probably looking at about $35.67, but that'll should just be the beginning of a move up on that. Okay. Let me see here. Can you show bullish and bearish scenarios? Why? There's nothing bearish going on. The only bearish scenario that we would have with Bitcoin right now is potentially a move down, like again, just wave 4 secondary target, 50% retracement, about 42,856. That's the bearish scenario. There is absolutely nothing else going on-chain data, the chart, whatever, that says that what's going on Bitcoin is bearish right now. Bearish as in the top of the cycle's in and, we're in a bear market, going down for the next few years kind of thing. There's absolutely nothing in terms of the chart itself and what's going on with on-chain metrics that would say that anything, that's the case. Does that make sense? Hopefully it makes sense. But yeah, again, when we're looking at there, right? Again, the only thing that you or somebody else might consider bearish is a breakdown below the swing low here. But again, we would just be looking at secondary target for wave 4 here. But everything that's going on here, what I explained already, there's, especially with this capitulation down here so large over the whole thing, okay? It doesn't make a lot of sense. Now, again, I can't guarantee that price is going to do one thing or another. But I think the only time you really need to start thinking like bearish, like, oh my God, the cycle's done and the top's in, is if we go smashing through this 50% level here and close down below it, smashing through it and close down on that smash through it. Until then, in terms of this overall structure, there's nothing bearish going on, right? We had this sideways here. Everybody freaked out, thought it had to go down. I told y'all we were going to break out, and we did. Right before we did, or when we did that, everybody's like, oh, no, it's got to come back and retest and go. And I said, no, most likely what's going to happen was we're going to get it just what we got here, this reaccumulation on the rise here. And so same idea coming up through here. We should kind of hit the resistance pullback and then break out. And I don't really think that we get a pullback and a retest. I think it just kind of continues up through it. Okay. You mean where I would change my bias? Yeah, like I said, we'd have to have price would have to come smashing through this 42,856 here and close really heavily down below it. I mean, that's really what would have to happen. In terms of structure here, based on pivots, I would need to see a weekly breakdown and close below this weekly pivot here based on pivot structure to really kind of change the idea that maybe this is the top here and we're headed down. But as the next year comes in, these pivots will change. So that'll change. But that would have to happen this year in order for me to really go, okay, well, yeah, maybe that's the top there. Because there's just nothing else structurally that says that's the top there. Does that make sense? I know a lot of people are very, frustrated and concerned and scared and whatnot. And that usually happens because they don't understand, how markets work and how structure develops with price action. And so when I say stuff like that, it's not very, I recognize it's not very encouraging because it's not like something really close, right? Everybody wants to know where up here. If it goes through here, Chris, does that mean that we're going way down to 20,000? People want to know that, but that isn't really how it's done. Right? Does that make sense? And how would you react? Stay and rebuy at 32 or 33? I would have to see how the structure develops on that move down. Right? That's what I would have to see. I couldn't say, I would automatically just buy a 32 or 33. If we're talking about the top actually being in, I would have to understand how the structure looks coming off that all-time high to get an idea of, okay, is that really the top when it gets to that level, or is there some other way to explain this that maybe I missed originally? Yeah, I wouldn't just be like, oh yeah, just buy it, whatever. No, I'm not that person. I never say, oh yeah, you got to buy right here if it gets there. Yeah. I'm always all about getting more confirmation through the structure that develops along the way. Now, Saul continues to be an amazing rally off that $9 buy back over here. We've got this bit of a wedge going on here. We're hovering around this previous resistance support level. It's right around the R1 pivot here on the weekly. Overall, again, looking for this thing to rally up higher. Based off the height of this structure here, that'd be minimum expected target up here. The idea being this is probably a 1, 2, 3, 4. We'll get a 5. Minimum around 315. Potentially up here closer to 410. On what's it called here? This thing, Solana. Is that a golden cross on Solana? I don't know. I don't have any fibs on there or any moving averages. I don't usually use moving averages. It's too much of a lagging kind of indicator for me. So I don't, I go based more on structure than that. And I don't give a lot of thought to golden crosses and death crosses because they depend on the structure, right? So this sharp move up, sharp move down is going to show you a different time at which they cross than let's say this right here where you have these two ups and a down, the double top there. When the 50 and the 200 cross here, it's going to, it would be different than if it crossed, on this one coming down here, because you have a sharp move back down versus over here, you have a more elongated stay at the top before it comes back down. So, sometimes they'll be, the crosses will be, lagging, like really lagging. Sometimes you'll get a cross that's happened after the event, right? You'll get a bearish cross, death cross after price has already made the move down, instead of signaling that there's a move down. Okay. Let me see here. So that's Solana. Oh, we got Pepe here. What's going on, Pepe? Still looking at this long on the breakout here. Coming up toward the up close, almost to the swing high up there around 15,721. It's going to be a 10.5 hour trade when it's said and done with. Stochastic RSI reset down here and oversold. Starting to curl up. If we keep coming lower here, we'll look at that S1 pivot at about 72, 7,200 there. But if we can get impulsive breakout and close above the daily pivot here at about 9,600, that should indicate that the pullback's likely complete and we're headed up toward that target area coming on here. Let me see. But overall, not looking terrible here. I look at this right here. So you got this bullish SFP here, right? This sweep of this low here. But look at what you're noticing here. So you had this green demand structure here, and you had to dip into it and then move, and then at resistance, and then came back, dip back into it, right? But they're all dipping at that same area. 1, 2, 3, 4, almost to the same area, leaving wicks. That means demand is really interested in that area. It's very significant in that area. I like to see that. Because that sets up the move, right? So here we are up, pull back, rally up. Kind of heading out as we're working on this here, but ultimately looking for it to get up here near that swing high. I think overall we'll probably end up making a new all-time high with it as well. Okay. So I don't hate the structure here. Case y'all been under a rock, man. Jeez, oh whiz. There is there it is, right? There's Pepe. Pepe been doing the work here. Let me see. Yeah, that's the structure I'd be watching there. Because you don't want to take the swing low off here, because this is the day it entered the market, this exchange. You don't want to take that. You take from after that day is done with. Then you start here. And so just generally speaking, if I look at this, it goes 1, 2, 3, 4, 5. ABC. And then it looks like it goes 1, 2, 3, 4, 5. 4. So it looks like, we do a 1, 2, 3, 4, working on 5. And if that's the case, based on the height of wave 4 there, pattern target around 33,652. Just based off that. But, again, it could go higher than as I was talking about on the Bitcoin chart earlier. So, yeah, definitely not hating it at all there. Get back here to Bitcoin. What's going on Bitcoin here? Yep, pulling right up into this supply. Up in that area there, low volume node, getting some rejection. So definitely want to see this kind of breaking out higher there, but I like what I'm seeing so far off that rally. Tillman, what's going on, man? What would be the market cap at the top of wave 5 for which one here, Tillman? I know this the stream is behind, a few seconds to make sure it runs clean for y'all. So you have to let me know which one you were talking about. Was it Pepe or was it you're talking about Bitcoin? Either way, I don't know for sure. I don't have the information on the top of my head, but if somebody else is watching and they've got that, they can pop it in there if they know. By the way, guys, if you're not watching us, you should be watching myself, Tillman, and Andrew there. Not Andrew Bennett, but a different Andrew. There on Wednesdays, we do Beards and Bitcoin at 11 a.m. Central Standard Time here on the channel. And if you haven't seen it, go back and look at the past ones. We discuss a lot more than price. We really look at Bitcoin, in the future of Bitcoin and what does it mean? What does it mean for global finance? How does it get integrated? What can you do with Bitcoin? If you're like, oh, I'm not going to get Bitcoin because it's not going to 100x next year off air, and you go, oh, that's why I'm not going to get it. Well, you're not understanding the whole picture, right? You're not understanding the whole picture, and you want to be careful with that because there are a lot better reasons to jump into Bitcoin, for instance, than there is to jump into pretty much everything else. In terms of base layer for the financial system, the fact that we now have options have been greenlit on IBIT, Bitcoin ETF, and it'll be greenlit for other Bitcoin ETFs as well. And eventually, I don't believe it'll be too long, but we'll be able to see options on spot Bitcoin as well, which will be, great. Monkey Man says Bitcoin isn't going to 100x again. I believe that too. Yeah, I don't think it's going to ever 100x again either. I don't know. 100x from here would be what? 60? I mean, it'd be 6.2 million. I'll give that a toss up, maybe some point way in the future. I can't say that won't happen. That might. But that isn't the reason why you're getting Bitcoin these days, right? Tillman, my friend Tillman there said it best, guys. Here's the way to look at Bitcoin, right? So everything that happened prior to January of this year in Bitcoin was all under the ground. Like if you think about the earth, right? It was all underground. It was all in the dirt, right? But in January, when the Bitcoin ETFs were approved, that started the growth outside of the ground, right? And what does that mean? That means it is a different structure now than what it was previously. It also means, as Gary and I have pointed out many times, Gary Cardone and I have pointed out many times before, it is the least riskiest time to get into Bitcoin today at this price than what it's ever been, because of the fact that things are different now, right? Things are different now. We have institutional involvement. We have nation states, small nation states, but nation states on the left getting involved in it, right? We have here in the U.S., we've got, accounting changes that allow corporations, businesses to now make it feasible to hold Bitcoin on their books, right? So we're getting a different type of interest level as well coming in. And now with it becoming more and more like TradFi, which you may argue that you don't want, but I'm telling you, if you want Bitcoin to be adopted and to be that thing that you want it to be, that safety against fiat, you need these things to happen. Because guess what happens now? Now that you can trade options on Bitcoin, on IBIT for right now, Bitcoin ETF, that allows you now to make money with arbitrage. That allows you now to protect your downside. So you don't have to sell Bitcoin when it's going up. You can get into puts. You can buy puts, right? And then if it's going down, you're gonna make money on those puts while you're losing money on your on paper on what you're holding. But guess what? If you don't have to sell your Bitcoin, you don't have to pay capital gains taxes on it, right? But the big thing that comes from this as well is that now you're going to be able to generate yield, right? You're going to be able to create cash flow. So, talking about the Cardones, right? Grant Cardone, he's a big real estate guy, and his interest in real estate is not only the tax reasons, right? But also the fact that he does multifamily units, so you're getting cash flow. That's what he's interested in, right? He can take out loans against the property, right? And he knows that over time, generally speaking, those properties are going to, increase in value. But you take out loans, you don't have to pay taxes on the loans. Now you use the loan proceeds and you go and you reinvest in more cash flowing properties, right? That's what he does. With Bitcoin, right? Now, we're not at that point yet where we're going to get that where we can really do that loaning that makes sense like you can against a mortgage. I'm sorry, against a property, right? With a mortgage. But it's coming. It's coming. But for now, you can at least generate yield. You can generate some cash flow. You can sell puts. You can sell calls. Covered calls, covered puts, on Bitcoin that you have. Right? And so you can make money on that without actually, again, having to sell your Bitcoin if you do it right? This is important. This is significant. No longer is Bitcoin this thing that you have to choose feast or famine with. Does that make sense? It's no longer, oh my God, I need to sell my Bitcoin because this thing happened out of nowhere. With options, eventually getting, being able to take out loans on it, like real loans that matter, right? Not like 30 APY loans or something like that. But being able to do that now gives you ways to generate fiat off your Bitcoin without actually having to sell your Bitcoin. So if you believe Bitcoin is going to continue overall going up in value over time, then that's what you're doing, right? The same way you can take loans right now against, stock shares that you have. Shares of stock, right? If you believe it's going to go up over time, you have to worry about it right now. You can take loans against it, depending on how you structure those loans, right? So you can create cash through a loan, which isn't taxable. And you can use that money then, hopefully you use it to reinvest and to create more of this for you. But this is just scratching the surface here, guys, on the potential with it, with everything that's happening. So don't let people out there kind of get you all riled up about, oh, this isn't what Bitcoin was, and this is whatever, blah, blah, blah. As I've been telling you for years, this is where it was going. If you want mass adoption, it absolutely has to do this. There's no other way. And you want mass adoption because you want that protection against inflation, against the killing off of fiat, right? The debasement of that fiat currency. You want that. Whether you understand that you want that right now or not, the things that you want, it's a requirement. Okay? All right. Anyway, listen, that's going to be it. I'm going to get out of here. I appreciate you guys spending a little bit of time with me today. We'd love to have you at the TWC Traders Club, guys. Go to TWCTradersClub.com. You can see myself, Andrew's, Fibbo's, and Vince's trades going on there. You can jump in with us, learn about proper risk management, learn about market psychology and whatnot. Comes up there. Get my evening market wraps where I talk about the different markets and what's going on and what we're kind of looking at in the news and stuff like that's happening. So much going on there, guys. All right. So jump in there, join us. We'd love. Always remember, let me see if I can get me back in there. There I am. Hey, look at that. Is always remember the only thing you control is how much you lose. So please keep working on that risk management. It is the most important thing you're going to do day in and day out as a trader. All right. And by the way, if you're interested in a lot more than just, trading alongside us, if you really, really, really want to learn how my markets move the way they do, why I'm not stressed out and haven't been stressed out over the last 6 or 7 months, like everybody else. If you want to learn all that, you can join us at TexasWestCapital.com. Join the TWC Trading Academy. You won't regret that, all right? Y'all trade safe out there. Have fun. And, man, take a little bit of time away from the computer this weekend, guys. You got to get away from it, okay? All right, y'all take care, and I will see y'all, I guess, next Wednesday for Beards and Bitcoin, next Friday for the market breakdown here, all right? Take care.